Hello everybody, Namaskaram all. This me Ramsha this side. Now in this video, we actually plan to discuss the solutions of June 25 CMA final CFR question paper. Ready? So in this video, what are the things you could expect from my side? Number one, you could expect a detailed discussion, especially related to bit confusing question and all the answers I presented in our own way, which I usually presenting in the classrooms. And you don't expect detailed discussion related to ditto question, which we done multiple times from the classroom. And of course, you could expect a maximum clarity within a short span of time. So that's why we are not writing the answers on screen because it will take too much time. We already written the answers previously, so we will show it and we will discuss, especially when it comes to confusing area. I'll discuss much. Don't worry. So first I do describe descriptive question, then I'll solve MCQ question. Now to get the PDF of the answers I presented, you can WhatsApp at this number, so you can get this. Ready? So now we directly moving on to the detailed discussion. So first, when we coming into descriptive question, we'll come to the MCQ question later, but first we come to the descriptive question. So there you can see the first question. Ready? So yeah, that's it. So question 2A. So now let's read out the question first. Alka Limited, which has a machinery at a cost of 4,80,000 and provision for depreciation of 1,60,000 on 1st April 22. Ready? So on that date, the remaining life of the machine is 6 years with a residual value of 80,000. On the same date, one component of the machine is replaced and the price of new component is 60 and the cost of old component is 50 with the accumulated depreciation of 20,000. So there is a replacement accounting. Clear? That's it. So that's it. This is a replacement part they test. Now after that, the supplier of new component took the fair value at a fair value of 36,000. On 1 year after 31st March 23, the machine is revalued. So the revaluation, there is an upward revaluation. Clear? And 1 year after, there is an impairment loss. So that's it. So here actually there is testing two special point. Number one is impairment loss, some amount goes to revaluation reserve and the some amount goes to P&L, and there is a special point related to additional depreciation due to upward revaluation in the previous year. So they ask to show the journal entries. You don't require to write the narration. That's it. So depreciation is calculating SLM. So this is an exact ditto question we done in our illustration 8. Ready? So illustration 8. So you could see this page number 23 in ICMA material. So you can see the same question. So that's why I'm not discussing it, because we done multiple times. So actually this is a good question. Clear? Now we're not discussed because it's the same question we done many times. So that's it. Okay. Now we come in to the second question, which was not a ditto question. Yeah, we'll discuss. Clear? It's an impairment loss related to question. Okay, yeah, coming into the question. A machine was acquired by S Limited 15 years ago at a cost of 20 crore. So actually this machine was purchased 15 years ago. 15 കൊല്ലം മുന്നെയാണ് ഈ അസറ്റ് വാങ്ങിയത്. അന്ന് എത്രയാണ് പ്രൈസ്? 20. Now accumulated depreciation until 31st March 24. So currently 31st March 24 vare 16.6 crore total depreciation they charge. So the current book value will be 3.4. Current means 31st March 24, we will have a book value of 20 minus 16.6, we will get 3.4 crore. Ready? Now depreciation estimated for the next year. That means after 31st March 24, there's an year 24-25. So for that 1 crore. Clear? So 3.4 is a book value on 31st March 24. To get the carrying amount on 31st March 25, you must deduct 1 crore also. So you'll get 2.4 crore. Ready? Now, estimated net selling price on 31st March 24 is 1.2 crore. So on 31st March 24, it is 1.2, which is expected to be declined by 20% by the next year. So within 1 year, there will be a reduction of 20% from this 1.2. So you will get net selling price for 31st March 25 also by doing 1.2 minus 20%. That's it. Okay. Now its value news has been computed at 1.4 crore on 1st April 24. Ready? So that means it is equal to 31st March 24. Which is to expected to decrease by 30% by the end of. So if you want 31st March 25 value news, you deduct 30% from 1.4. Clear? Now assume that other condition of relevant accounting standard for applicability of impairment are satisfied, and no impairment test was carried till 31st March 24. That means on this date, there is no impairment. So impairment is happening on 31st March 25 because until 31st March 24, they were not carried any impairment test. That is openly saying. Clear? Now let's see the requirement of the question. Clear? So what should be the carrying amount of this machinery on 31st March 25? That's the first question. Now second question is how much will be the impairment loss for 31st March 25, and if the value in use were 0 and company was required to incur a cost of 8 lakh to dispose the plant, compute the carrying amount of machine and impairment loss on 31st March 25. Clear? Okay, that's it. We'll come to the answer. Ready? Just a minute. Yeah. 1 minute. Yeah, that's it. Now you could refer this answer. So actually in this question, they were purchased the asset 15 years ago. Clear? So at that time original cost 20. So during this 15 years total 16.6 crore depreciation. So on 31st March 24 the carrying amount is 3.4. Now there is 1 year 24-25 there is a depreciation of 1 crore. So the carrying amount on 31st March 23 is 2.4 crore. That's the first part. It could be easily calculated like this. So the original cost 20 minus 16, you will get carrying amount on 24 first, then you deduct 1 crore. So easy, you deserve 1 or 2 mark for this. So part 1 is okay. Part 2 is impairment loss on 31st March 25. You know that for calculating impairment loss, first you have to calculate the carrying amount. Carrying amount 31st March 25 is this 2.4. Now you have to calculate recoverable amount, which is a higher of value in use or net selling price on 31st March 25. So currently they given the fair value less cost to sell on 31st March 24. From that you deduct decrease. So you see this question as here. Ready? 1.2 is a net selling price on 31st March 24, which is expected to decline by 20%. So you will get the fair value less cost to sell at 0.96 by deducting 20% from 1.2. You check it. Ready? You will get it. Now just like that, value in use is 1.4 minus 30%, you will get 0.98. So out of that, which is a higher amount, 0.98. So the carrying amount on 31st March 25 is 2.4. So the impairment loss will be 1.42. Clear? That's it. Now coming into this side. Ready? Yeah. So the third question, if the value in use was 0, and the company is required to incur a cost of 8 lakh to dispose a plan, compute the carrying amount of the machine and impairment loss on 31st March 25. So actually this could be answered in two ways. I'll explain. Remember, the one way most of the students will get is, actually the value in use is 0. So value in use is 0. Okay. Now net selling price, they're not given here, but they give net selling price on 31st March 20, which is 0.96. We calculated as this. Ready? So they give the net selling price on 31st March 24 minus 20%, you will get 0.96. That's a selling price. But from that, you deduct 0.96 minus you deduct 8 lakh. That is a cost to incur. Ready? So then how much you will get? You will get this. Ready? So just a minute. You will get 0.88. That's it. Ready? Now value in use is 0. Net selling price is 0.8. Out of which higher is 0.88. That's it. Now the carrying amount before impairment loss is 2.4. Then the impairment loss is 1.52. So that's it. So the revised carrying amount will be 0.88. Ready? That's it. So remember, here they gave selling cost. Just a minute. Yeah, that's it. So they gave selling cost of 8 lakh. Ready? That's it. If the selling cost is 8 lakh, net selling price will be 0.96 minus 8, you will get 0.8. And value in use is 0, then you will get the answers like this. Clear? Ready? So this is the one answer you can write, but there is an alternative view. What is that view? Remember, they gave value in use is 0. Ready? They gave value in use is 0. And if the when an asset assets value becomes 0, എപ്പോഴാണ് ഒരു അസറ്റിന്റെ വാല്യൂ 0 ആവുന്നതെന്ന് ചോദിച്ചാൽ ആ അസറ്റ് വാല്യൂലെസ് ആവുമ്പോഴാണ്. സോ an asset's value becomes 0 when that asset actually become valueless. If that asset become valueless, net selling price will be 0. That's a clarity you could silently take. Ready? If the net selling price is 0, then disposal cost is 8 lakh. So you will get net selling price is minus 0.08 crore. 0.08. So out of that, അതായത് ഇവിടെ ശ്രദ്ധിക്കണം, ഇവിടെ ഒരു അസറ്റ് ഡിസ്പോസ്ഡ് റിട്ടയർഡ് ആയാൽ അതിന് പിന്നെ വിറ്റാൽ ഒന്നും കിട്ടില്ല എന്നുള്ള പോയിന്റ് ഓഫ് വ്യൂല് 0 എടുക്കുക അതിന്റെ വാല്യൂ. സോ വാല്യൂലെസ് ആയ ഐറ്റത്തിന് വിറ്റാൽ ഒന്നും കിട്ടൂല. പക്ഷെ അത് വിൽക്കാൻ അല്ലെങ്കിൽ ഡിസ്പോസ് ചെയ്യാൻ, ഡിസ്മാൻഡിൽ ചെയ്യാൻ ഒരു കോസ്റ്റ് ഉണ്ട് 8 lakh അല്ലെങ്കിൽ 0.08 crore. അപ്പൊ നെറ്റ് സെല്ലിംഗ് പ്രൈസ് എത്രയാണെന്ന് ചോദിച്ചാൽ 0 minus 0.08, which will be 0.08, and value in use is 0, out of which whichever is a higher amount, 0 is a higher amount. Clear? So minus 0.08 or 0, out of which the higher amount is 0. Then carrying amount before impairment loss is 2.4. Then the entire carrying amount will be impaired. Ready? So this is the alternative answer. Both the answer is usable. So I personally prefer you can use this because that is easily you will get, but principally this is a bit more right. Ready? So that's it. So both the answers given by the ICMAI, ready? Both the answers they given in their answers. Clear? Okay. Now, okay, that's it. So രണ്ട് രീതിയിലും ആൻസർ ചെയ്താം, ബട്ട് ഞാൻ പറഞ്ഞതുപോലെ ഒന്നും കൂടെ എളുപ്പം ഫസ്റ്റ് രീതിയാണ്, പക്ഷെ ലോജിക്കലി ഒന്നും കൂടെ റൈറ്റ് ഇതാണ് എന്നുള്ളതാണ്. പക്ഷെ ആ ലോജിക്കലി റൈറ്റ് ഏതാ എങ്ങനെയാ കിട്ടുക എന്നൊരു പക്ഷെ കുട്ടിക്ക് എക്സാം ഹാളിൽ നിന്ന് സ്പാർക്ക് ചെയ്തോളണം എന്നില്ല. ബട്ട് ദാറ്റ്സ് ഓക്കെ. അങ്ങനെയാണെങ്കിൽ ഫസ്റ്റ് രീതിയിൽ ചെയ്താലും ദാറ്റ്സ് ഫൈൻ. റെഡി? സോ both the way answers are given in ISMA answer key. You can see that alternative answer, and that's it. So now we coming into the second question. Clear? So yeah, just wait. Yeah, there's a question. Clear? 3A. So 3A on 31st March 24, A Limited entered into a contract with a customer for sale of goods for 20,000, granting 50% discount voucher to be availed in the future purchase up to 50,000 within 30 days. So actually this is the same question. Ready? Revenue recognitions. That means in this 115 illustration 24 coupon, redeemable coupon vouchers in the question ആണ് we done multiple times. Ready? That's it. So you can see, you can refer this question. You can take page number 82. The same question. Ready? So the same ditto question. So I'm not discussing it because it will be a waste of time. Ready? So that's it. Clear? Now actually coming into 3B questions. So that was a good question. Clear? So balance sheet of Famous Limited. Ready? So it was a goodwill valuation related question. Clear? So first they gave a balance sheet of Famous Limited on 31st March 25. So we have PP here. That's it. Book value is this. Clear? Financial assets. So which is an investment in 6%. So the cost of asset is this. There's a book value, but the face value is different. So if you want to calculate the non-trade investment income, you must multiply 6% on 2,80,000. That means on face value. Clear? Not it. Other non-current assets. So they gave you a hint that share issue expense. So we seen that preliminary expense or discount on issue is a fictitious asset. So this is a fictitious asset. So while you calculate capital employed for goodwill, you don't take fictitious asset. So this is the item you have to exclude. Ready? Now coming into current asset, inventory, this is the book value, but which is taken as 90% of market value. So if you want to calculate market value, which you can calculate 6.3 lakh, so this is representing 90. So if you want to calculate market value, just multiply with 100. Clear? Now trade receivable, debtors, cash balance. That's it. So share capital, other equity, liability, trade payables. So 2,94,000. So actually they intend to scare you by giving some extra information like this. Total outstanding due of creditors other than micro enterprise and small enterprise. So those are actually schedule 3 disclosure requirement, but this will never influence our answer. Ready? So provision for tax, that's a liability. Clear? So we have 2 liability, trade payable and provision for tax. So coming into additional information. Ready? So we have issued share capital, other equity, retail, general reserve. We have opening P&L. Now current year profit. So 24-25 financial year profit is 3,36,000. So the last year PAT is given directly 3,36,000, not it. Now let's see the additional information which is PP are understated by 6,72,000 and which have suffered. So actually it has happened a further depreciation of 2,80,000. So while you calculate the capital employed, so actually currently we have a book value of 10,92,000. 10,92,000. That's a current book value. Now when you calculate the fair value for capital employed, So 10,92,000, which is understated. That means which is in decreased way. Clear? Now we have to add with this amount 6,72,000. But currently 6,72,000 minus a further depreciation of 2,80,000. അതായത് ഇപ്പോ 672 ഇല്ല, 672 മൈനസ് 2.8 ആണ് ഇപ്പോഴുള്ള അണ്ടർസ്റ്റേറ്റിംഗ്. സോ ഇവിടെ സ്വാഭാവികമായിട്ടും കുട്ടികൾക്ക് ഒരു കൺഫ്യൂഷൻ ഉണ്ടാവും, ഇത് അഡീഷണൽ ഡിപ്രിസിയേഷൻ ഡ്യൂ ടു അപ്വേർഡ് റിവാലുവേഷൻ അല്ലേ? അല്ല. റെഡി? സോ ഡീറ്റെയിൽ ആയിട്ട് ഞാൻ ഇത് ചെയ്യുമ്പോൾ ഡിസ്കസ് ചെയ്യാം. എന്തായാലും ഇപ്പോൾ 672 മൈനസ് 2.8 ആണ് നിങ്ങൾ ഇവിടെ ആഡ് ചെയ്യേണ്ടത്. റെഡി? സോ ഐ ഡിസ്കസ് ഇൻ ഡീറ്റെയിൽ വൈൽ ഐ ഡൂയിങ് ദ സം. ഡോണ്ട് വെരി, ബട്ട് ദിസ് ഇസ് എ ബിറ്റ് കൺഫ്യൂസിംഗ് ടു ദ സ്റ്റുഡൻസ്. ഐ ഡിസ്കസ് ഇൻ ഡീറ്റെയിൽ വെൻ ഐ ഡു ദ സം. നൗ plainly read the question. Now the company doing similar business as that of Famous Limited are earning market return of 10% on capital employed. That's a NRR. This is the NRR. Clear? Okay, now profit over previous 3 years have been increasing at 70,000 per annum. So this is a hidden clue for calculating last 3 years profit. So last year profit is this. So now they give a hint that last 3 years the profit has been increasing. That means if you want to calculate the 23-24, you have to deduct 70,000. Ready? So that's it. So I'll discuss. Don't worry. For valuation purpose, stock is to be considered at market price. Consider tax rate as 50%. Based on the above detail, you are required to compute the value of goodwill based on 3 years purchase of super profit. So this is a goodwill valuation actually tested for 3 years profit of super profit. So let's come to the answer. Ready? So now I written. So this is a basic formula. You have to keep super profit in a number of years. So FMP minus nominal profit, which is calculated as capital employed into NRR. Ready? Now coming into working note 1, FMP calculation. Ready? So the first clarity note. So for last 3 years profit, they are not directly given, but they give a clue. So this is a clarity note for you. Since questions specify the past 3 year profit have been increased by 70,000, we could calculate the last 3 years profit in reverse order. That means currently in last year 336, which is after the increase of 70. So if you want to calculate previous year profit, you just deduct. So you'll get 2425. Profit will be this, and again you deduct 70 back, then you will get 2324 this, and 2223 this. Clear? So this is the last 3 years profit. Clear? So that's it. So this is a PAT. This is a profit after tax. So now if you want to calculate FMP, we start with PBT. We start with PBT. Now remember, so if you want to calculate PBT, നമ്മൾ എന്താ ചെയ്യേണ്ടത്? PBT is equal to PAT divided by 50%. So when you reverse it, you will get it. Clear? That's it. So 1,96,000 divided by 50, you will get this. 266 divided by 50, you will get this. Clear? Now remember, actually എന്തൊക്കെ past adjustments ആണ് അവിടെ ഉള്ളത് നോക്കാം. So what are the past adjustment you have to do? So there is only one past adjustment. There is no non-recurring item, no error. There is only non-trade investment income. So you have to calculate non-trade investment income as 2,80,000 into 6%. Never do 6% on 224. Actually our interest കൊടുക്കുക face value ന്റെ മുകളിലാണ്. Ready? That's it. So clear? Now when we coming into non-trade investment income in each year, you will get 2,80,000 into 6% this. So once you deduct, you will get adjusted PBT. Now we have to calculate average adjusted PBT. But remember, actually this is a super profit method. So here they specify that the profit is increasing 70,000 in last 3 years. That means there is a trend. So question is strictly saying that there was a past trend in the profit. So here, when you calculate the average profit, you must apply weighted average. If you calculated on simple average, still that is right, but here it is preferably right is doing weighted average. So that is saying by ICMA also, when they coming to their answer, they clearly saying that since there is a trend, so the better reflection of correct profit for the FMP is doing weighted. You can read this. So now when we coming into my answer, I also clearly written that. So here you have to calculate the weighted average. Since the question strongly specified that there is an increasing trend, we do take weighted average. So how do we calculate weighted average? So weight will be given in serial order 1, 2, 3. So when you multiply with that and you divide it with the weight, you will get the weighted average profit this. So you check the figures. Ready? I'm not taking time for calculation on screen because it will take too much time. നിങ്ങൾക്ക് വേണ്ട ക്ലാരിറ്റി കൃത്യമായിട്ട് പറയുന്നുണ്ട്. Now remember, this is the average adjusted PBT. Now there is no future adjustment. Ready? There is no future adjustment. അതെന്താ സർ, അവിടെ ഒരു അഡീഷണൽ ഡിപ്രിസിയേഷനെ കുറിച്ചിട്ട് പറയുന്നുണ്ടല്ലോ, അത് അഡീഷണൽ ഡിപ്രിസിയേഷൻ ആണോ എന്നുള്ളതാണ്. അതെന്തായാലും ഞാൻ ഡിസ്കസ് ചെയ്യാം. ആക്ച്വലി അവിടെ അഡീഷണൽ ഡിപ്രിസിയേഷന്റെ അഡ്ജസ്റ്റ്മെന്റ് വരുന്നില്ല എന്നുള്ള രീതിയിൽ തന്നെയാണ് നിങ്ങൾ ആൻസർ ചെയ്യേണ്ടത്. അങ്ങനെ ഇല്ല എന്നുണ്ടെങ്കിൽ there is no future adjustment, then this is a FMP before tax. So minus tax, you will get FMP after tax. Clear? That's it. Now remember, now the working note 2 is capital employed. So here PP, so that is to be discussed in detail. Remember what the question actually demanded. Ready? So the currently book value is 10,92,000. Ready? In most of the question, അവരെന്താ പറയാറ്, ഫെയർ വാല്യൂ ഇതാണ് അല്ലെങ്കിൽ റീവാല്യൂഡ് എന്ന് പറഞ്ഞിട്ടാണ് പറയാറ്. അപ്പൊ അങ്ങനെയാണെങ്കിൽ നമ്മളത് എടുക്കും. എന്നിട്ട് ഇപ്പൊ അപ്വേർഡ് റിവാല്യൂഷൻ ഒക്കെ ആണെങ്കിൽ ചിലപ്പോൾ അഡീഷണൽ ഡിപ്രിസിയേഷന്റെ കഥ ക്വസ്റ്റനിൽ പറയാറുണ്ട്. അത് അഡീഷണൽ ഡിപ്രിസിയേഷൻ ആയിട്ട് തന്നെയാണ് പറയാറ്. പക്ഷെ ഇവിടെ ഇത് അഡീഷണൽ ഡിപ്രിസിയേഷൻ ആയിട്ടല്ല പറഞ്ഞത്. ആൻഡ് ഇവിടെ ചില കുട്ടികൾക്ക് ഉണ്ടാവും ഇതൊരു എറർ ആയിട്ട് ട്രീറ്റ് ചെയ്യണ്ടേ എന്ന്. റിമെമ്പർ, ഇവിടെ പിപിയുടെ എറർ ആക്ച്വലി നമ്മുടെ P&L ബാധിക്കില്ല എന്നുള്ളതാണ് ഒരു ടേക്ക്. മറ്റൊന്ന്, ഈ ക്വസ്റ്റ്യനിൽ അവര് ഇപ്പൊ എത്രയാണ് റീവാലുവേഷൻ ഇൻക്രീസ് എന്ന് എങ്ങനെയാ പറയുന്നതെന്ന് ചോദിച്ചാൽ സ്ട്രൈറ്റ്ലി അല്ല പറയുന്നത്. അതിന് പകരം 6,72,000 which is suffered, that means which is reduced a depreciation of 280. So in short, this net amount is a real revaluation increase or fair value increase. Clear? That's it. Now ഇവിടെ രണ്ട് ഡൗട്ട് പോസിബിൾ ആണ്. ഒന്ന്, സർ ഇത് എറർ അല്ലേ, അപ്പൊ P&L ബാധിക്കില്ലേ? ആക്ച്വലി ഇല്ല. പിപിയിൽ ഇപ്പോ ഓൾറെഡി എത്രയാണ് ഇൻക്രീസ്ഡ് ആയത്? അത് ഓൾറെഡി 2,08,000 കുറഞ്ഞതിന് ശേഷമുള്ള എമൗണ്ട് ആണ് അവർ പറയുന്നത്. അതുകൊണ്ട് തന്നെ ഇനി അവരുടെ പോയ വർഷങ്ങളിലെ P&L തിരുത്താൻ നിൽക്കണ്ട. ദാറ്റ്സ് ഇറ്റ്. ക്ലിയർ? റെഡി? ഇനി പിന്നെ ഇത് അവര് റീവാല്യൂഷൻ ഇൻക്രീസ്, ഫെയർ വാല്യൂ ഇൻക്രീസ് ആയിട്ട് തന്നെയാണ് പറയുന്നത്. ഫെയർ വാല്യൂ ഇൻക്രീസ് തന്നെയായിട്ടാണ് പറയുന്നത്. പക്ഷെ ആ പറയുന്നത് സ്ട്രൈറ്റ് ആയിട്ട് പറയുന്നതിന് പകരം let's say 672 minus 280, which is 392. So instead of saying this, they could say 292 was decreased or understated. So the revaluation increase is 392. അതായത് നിലവിലുള്ള ബുക്ക് വാല്യൂ എന്ന് പറഞ്ഞാൽ കുറഞ്ഞിരിക്കുകയാണ്. എത്രയാ? 392. ആ 392 സ്ട്രൈറ്റ്ലി പറയുന്നതിന് പകരം 672 മൈനസ് 280. സോ ഇവിടെ പാസ്റ്റ് ടെൻസ് ആണ് ഉപയോഗിച്ചത്. സഫേർഡ് ഫർദർ ഡിപ്രിസിയേഷൻ. സോ അല്ലാതെ ഫ്യൂച്ചറിൽ അഡീഷണൽ ഡിപ്രിസിയേഷൻ എന്നല്ല പറയുന്നത്. നോട്ട് ദിസ് പോയിന്റ്. അതുകൊണ്ടാണ് നമ്മൾ ഇങ്ങനെ എടുക്കുന്നത്. അല്ല, ഇതിന് പകരം അവർ ഒരു പക്ഷേ അഡീഷണൽ ഡിപ്രിസിയേഷൻ ഇൻ ഫ്യൂച്ചർ എന്ന് പറയുകയാണെങ്കിൽ ഇതൊരു FMPയിലും വരുമായിരുന്നു. സോ ഇൻ ഷോർട്ട്, സേയിങ് ഇൻ ഇംഗ്ലീഷ് ഫോർ ദ നോൺ മലയാളി സ്റ്റുഡൻസ്, റിമെമ്പർ actually in this question they specified that the asset currently the understated decreased. So that means the book value is reduced with an amount of 392. That 392 is not directly saying. They say actually it is decreased by 672, but that 672 is suffered a depreciation of 280. So the currently the net increase will be only 392. Are you okay? That's it. That's it. So in short, while you calculate the capital employed, you calculate the PP fair value like this. The current book value is 392, which is decreased. Which that book value is actually decreased. So if you want to calculate fair value, you have to add up with that 392. That means 280 you have to minus from 672. So then you will get 6,72,000 minus 2,80,000. You will get 3,92,000. Then you add with 10,92,000. Then you will get 40,84,000. Then now we take debtors. There is no change, you can see. But stock, you have to calculate the market value, which is calculated as book value. They gave book value is representing 90% of market value. So to turn back into fair value, you have to reverse it. That's it. Then bank balance there, trade payable there, provision for tax. Then there is closing capital employed. So now whenever you calculate super profit, goodwill, capital employed, so you remember you try to get average capital employed. For that, last year PAT, adjusted PAT available aanu ennu check cheyanam. Yes, there is available. So last year adjusted PBT is this. Last year adjusted PBT is this. Ready? Just a minute. I'll drink some water. Okay. Now remember, this is the adjusted PBT for the last year. From this you deduct tax. So you will get 6,55,200 minus 50%. Ready? So into half, that is to be deducted. Then you will get this. So 6,55,000 minus 50% into 1 divided by 2 or divided by 2. That's it. You will get this figure. Then the average capital employed this. Then you will get the final goodwill is this. So FMP is this. 280,933. That is approximate. I think there is some point, decimal points are coming. You can round it into 3. Now the capital employed is 20,34,200 into NRR 10%. You will get super profit into number of years. That is a goodwill. So that's an approx amount 232,540 instead you can get. So that's the answer in the ICMAI. So we done with that question. Clear? That's it. So now we have to come to the next question. So that's it. Ready? So just a minute. Yeah, which was the next question? Yeah. Now, the next question is related to financial instrument. Comparatively an easy question, usual question. It's related to financial liability compound with an equity. Ready? So let's read out the question. Delimited issues 2000 convertible debentures on 1st April 2022. So that Delimited has been issued a debenture. So this debenture have a 3 years term and the face value is 1000 per debenture, giving total proceeds will be 2000 into 1000, 20 lakhs. So the interest paid annually at a nominal rate of 6000. So normally they give 6% interest. Clear? Now each debenture is convertible at any time up to maturity of 25,000 shares. So remember, here the debenture could be, this 2000 debenture could be converted into 25,000 equity shares. Ready? Now remember, when these debentures are issued, the prevailing market interest rate of similar debt without conversion option is 9. That means that's a fair rate, fair value of interest rate, ready, which is 9%. Now the debenture holders elected to convert the debenture into equity at the maturity. That means they have a choice to convert into equity and they selected at the end of the third year. So examine the liability component and equity component and finance cost and also pass a journal entry. So narration not required and the present value factors are this. There's a question, easy question. So since it's a financial instrument, financial liability, first we have to calculate the present value future cash flow at fair market interest rate. Ready? So which can be calculated as every year we pay 20 lakh into 6%, which is 1,20,000. So this is we pay for 3 years. Ready? So currently we get 20 lakh inflow now. So outflows in future will be in 3 years 1,20,000, and on third year it could be repaid to 20 lakh. So remember, so there's a 3 years amount. Now when we calculate the fair value of options, the figures will, fair value of future cash flows will be like this. Ready? So for 1 to 3 years 1,20,000. So the cumulative present value of these 3 years will be this. Total you will get this. Ready? So total. So when you multiply with this, you will get this. Clear? And on third year, you have to pay 20 lakhs. So the third year factor is this. And when you multiply with this, you will get this. And total 80 lakh 48,156. So in short, currently we receive 20 lakh. That's a total receipt. Out of that, the liability component is 80 lakh 48,156. So that means the rest of the amount will be equity component. Clear? So the figures be like this. So yeah, figures will be like this: 1,51,000, 8,44,000. So the initial entry at the starting date will be this. We received a bank 20 lakh, out of which the liability is this. So this will be the equity. Now this has to be amortized. That means this liability has to be amortized, and we have to calculate the interest at market rate 9%. So there is a present value of future cash flow. So it could be calculated like this. Ready? So you can check. So then every year we have a payment of 1,20,000, but at fair rate interest rate will be higher. So the liability at the closing date will be increased by this extra amount. Ready? That's it. So now this could be calculated as in this 116 amortization table. So by doing this will be the interest you get at each year, and at the last year you will get 20 lakh. That should be. But if there is any difference more than 20 lakh, you have to calculate the interest in reverse order. So at that time, the interest be like this. Ready? Interest be like this. Clear? Okay, when you take it. So the entry for each year, interest we total. So out of that, we actually pay this and the rest of the amount increase into liability. So for the next 2 years, we pass the same entry. So by the end of third year, liability will have 20 lakh balance and equity will have 1,51,844. So remember now remember the amount will be, we cancel 20 lakh liability and equity at the time of conversion. Ready? So this will be the total amount. Now we will issue the shares. 25,000 shares we issue for 10 rupee. So we get total 2,50,000. So the rest of the amount we take as a security premium, as a balancing figure. It's an easy part. Clear? That's it. Actually, there is an alternative presentation they gave by the SMA. You could also refer. So that's all about question related to financial instrument. Now we have to go to the next question, which is actually related to 4B. Is actually related to, just a minute. Actually related to Indian reconstruction, I think. Ready? So yeah, there's a question, so we'll see. That's it. Okay, now let's do a question which is 4B. Ready? Indian reconstruction related question. Actually the same question we done in our book. Ready? So 391 page number 4B, maybe page number maybe a bit difference in editions, but that's the same question. I'll show you the question. They give you a balance sheet there. You have PP, intangible asset, inventory, trade receivable, loans and loan advances. Ready? It's an asset. Share capital, other equity, long-term borrowing, short-term borrowing, trade payables. So here we have authorized, issued and full issued capital, equity and preference we have. So P&L account, there is a negative balance. Now long-term borrowing 8%, but which is secured by factory, ready, assets of factory. Then another debenture which is secured by assets of Karnataka factory. Ready? Now short-term borrowing, there is accrued interest and bank OD. Tangible asset we have PP of Bihar factory and PP of Karnataka factory. Ready? Then Goodwill trademark. Ready? Now similar question they were tested in June 24 also. Ready? I remember. That's it. So I'll read and I'll show the answer. Ready? Following scheme of Indian reconstruction was framed by the court and all the concerned parties approved and implemented. Pass a journal entry. That's the ultimate question. So first one, the preference shares are to be written down to 25 each. So the currently the preference shares are each having 100. So it is to be reduced to 100. Sorry, it is to be reduced to 25 and equity shares to be reduced to 5. Ready? So let's write the journal entry for this first. Ready? So simple. What you have to do is preference share capital account debit, individually 100 rupee, it is to be cancelled. Then preference share capital is to be issued, which is individually 25. The rest of 75 for each share will be coming to capital reconstruction or reconstruction account. Ready? So the amount will be like this. Ready? So when you convert total 50 lakh, so 50 lakh divided by 100 into 25 will get this, and into 75 will get this. Clear? So just like that we have, we have this. Ready? Equity shares reduced to 5 each. So currently equity shares is issued to issued at 100 rupee, not it. So 95 rupee will goes to capital reconstruction. So in total we have 20 lakhs. So the same way what we do is symbol, just a minute. Yeah, that's it. Equity share capital 100 rupee you will cancel, then issue new, and then rest of the amount. So proportionately when you calculate 20 lakh divided by 100 into 5, it will come 20 lakh divided by 100 into 95 will goes to capital reconstruction. Easy question. So now the new value of preference shares is this and equity shares is this. Clear? That's it. Ready? Now remember, what is the next requirement? I'll show you. Each class, that means preference shares and also equity shares, is to be converted into 100 each. Now, once it become 25, you again consolidated 4 preference shares into 100 rupees. So, and also here into 100. Ready? So then remember actually the numbers are changing but the amount is not changing. Even if it is 4 of 25 or 100 of 1 shares, amount is same. So what you have to do is simple. Actually when we return the first entry, what was the new share capital of preference shares? 3,70,000. So you cancel it. So individually you write 25. That's it. Now with the same amount, what do you do? Issue the new one. So the individual amount is different, but the total amount will be same. Hey, that means currently we have 3,75,000 divided by 25,000 shares. Ready? So 25. So 3,75,000 divided by 25, you will get 15,000 shares. Ready? So the currently 15,000 into 25, you will get 3,75,000. So but now this 15,000 is to be consolidated. Every 4 shares converted into 1 share of 100 rupees. So that means 15,000 divided by 4, you will get 3750 numbers. Into 100 you will get the same amount. So you don't need to be complicated with these numbers. What you have to do is you just cancel the old shares. So individually you write 25, then issue new. The amount is same. Just like that, preference shares, you do the equity shares 1 lakh, you cancel 1 lakh and issue, but individually you write the amount. So we done multiple times from the classroom. Ready? Now it's not a big deal. Now what is the next take? The B class debenture holders decided to take over assets of Karnataka factory at a valuation of 7,50,000 in part repayment of their holding. That means here we have Karnataka PP and we have B class, second class of debentures. So out of which 7,50,000 worth 7,50,000 worth PP has been taken by the debenture holder. So at that time what will be the entry? Entry is simple. What is the entry? Simple. You cancel the debenture and you cancel the PP also. So the entry will be simple. What is the entry? Remember, the entry will be ഇവിടെ നമ്മള് you will cancel debentures. Ready? So how much is the debenture? Debentures is 7,50,000 debentures we cancel. Now 2. Remember, let's understand the question here. The B class debenture to take over the assets of Karnataka factory. Actually, the book value of Karnataka PP was 20 lakh. 20 lakh. So the book value is cancelled 20 lakh. 20 lakh. So the PP is cancelled by 20 lakh. Now remember, the asset is decreased by 20 lakh, but whose fair value is actually 7,50,000. Whose fair value is 7,50,000. 50. So the debentures will be decreased only by 7 lakh 50. അതായത് debentures 7 ലക്ഷത്തിന്റെ എമൗണ്ടേ കുറയുള്ളൂ. എന്നാൽ PP 20 ലക്ഷം ബുക്ക് വാല്യൂലായിട്ടാണ് അവർ കൊണ്ടുപോയത്. പക്ഷെ അതിന് ഇന്ന് വോത്ത് എത്രയേ ഉള്ളൂ? 7 lakh 50. അപ്പൊ അവര് കണക്കാക്കുന്ന വാല്യൂ 7 ലക്ഷമേ ഉള്ളൂ. അതുകൊണ്ട് തന്നെ അവരുടെ ലാബിലിറ്റി 7 ലക്ഷമേ കുറയുള്ളൂ. അങ്ങനെയാകുമ്പോ സ്വാഭാവികമായിട്ടും അവിടെ ഒരു ലോസ് ഉണ്ട്. ക്യാപിറ്റൽ റീകൺസ്ട്രക്ഷൻ അക്കൗണ്ട് 12.5. So this is a net entry you can pass instead of this 2. So here what they do is first they do undervaluation of asset, then they settle. Ready? Instead of doing this 2 entry, you could alternatively pass this entry also. Ready? This is what we usually do. Clear? That's it. Now coming into the next one, which is debenture holders agree to waive the accrued interest in full. That means here it is an accrued interest on debentures. They agree to waive off. So then it's a profit. So you cancel the debenture liability and to capital reconstruction account. So the entry will be interest on debenture accrued account debit to capital reconstruction. So the entry will be this. Clear? That's it. The next part is this. Stock 50,000 is to be written off and 12,500 is to be provided for bad debt. That means provision for bad debt has to be created. So stock is underwriting. That means writing off. So we will credit stock account 50,000. Ready? Now to provision for bad debt 12,500. Now it's a loss, so we debit to capital reconstruction. When we pass separate entry for fourth item, this will be the entry. Now P&L account balance, there is a negative balance. Trademark and goodwill is to be written off in full. So that means here how much is a P&L account balance, which is 60 lakh 35. So when a loss which has a debit balance, when you write off a debit balance, we will credit. So P&L 60 lakh 35,000. Then goodwill and patent. Let's see. Okay, now how much is a goodwill and patent, which is 1,50,000. 1,50,000. Ready? So in total we will have 60,35,000 plus 1,50,000. So we'll get 70,85,000, which will be debited to capital reconstruction. So once after this transaction, there is no other transaction. So you just calculate the balance of capital reconstruction. There will be a balance of 12,500. You can transfer to capital reserve. If you pass a separate entry for that, capital reconstruction account debit to capital reserves, you can see when you calculate the difference 12,500. That's a simple part. Clear? So instead of doing 2 to 3 entries, you could alternatively write like this. Ready? That's it. So it's an easy question we done multiple times from the classrooms. Now we going to the other question, which is a business combination question. So this is actually we discussed in marathon discussion. Ready? But still I'll repeat. That's it. Okay, now let's do a question which is 4B. Ready? Internal reconstruction related question. Actually the same question we done in our book. Ready? So 391 page number 4B, maybe page number maybe a bit difference in editions, but that's the same question. I'll show you the question. They give you a balance sheet there. You have PP, intangible asset, inventory, trade receivable, loans and loan advances. Ready? It's an asset. Share capital, other equity, long-term borrowing, short-term borrowing, trade payables. So here we have authorized, issued and full issued capital, equity and preference we have. So P&L account, there is a negative balance. Now long-term borrowing 8%, but which is secured by factory, ready, assets of factory. Then another debenture which is secured by assets of Karnataka factory. Ready? Now short-term borrowing, there is accrued interest and bank OD. Tangible asset, we have PP of Bihar factory and PP of Karnataka factory. Ready? Then Goodwill trademark. Ready? Now similar question they were tested in June 24 also. Ready? I remember. That's it. So I'll read and I'll show the answer. Ready? Following scheme of Indian reconstruction was framed by the court and all the concerned parties approved and implemented. Pass a journal entry. That's the ultimate question. So first one, the preference shares are to be written down to 25 each. So the currently the preference shares are each having 100. So it is to be reduced to 100. Sorry, it is to be reduced to 25, and equity shares to be reduced to 5. Ready? So let's write the journal entry for this first. Ready? So simple. What you have to do is preference share capital account debit individually 100 rupee, it is to be cancelled. Then preference share capital is to be issued, which is individually 25. The rest of 75 for each share will be coming to capital reconstruction or reconstruction account. Ready? So the amount will be like this. Ready? So when you convert total 50 lakhs, so 50 lakh divided by 100 into 25 will get this, and into 75 will get this. Clear? So just like that we have this. Ready? Equity shares reduced to 5 each. So currently equity shares is issued at 100 rupee, not it. So 95 rupee will goes to capital reconstruction. So in total we have 20 lakhs. So the same way what we do is symbol, just a minute. Yeah, that's it. Equity share capital 100 rupee you will cancel, then issue new, and then rest of the amount. So proportionately when you calculate 20 lakh divided by 100 into 5, it will come 20 lakh divided by 100 into 95 will goes to capital reconstruction. Easy question. So now the new value of preference shares is this, and equity shares is this. Clear? That's it. Ready? Now remember, what is the next requirement? I'll show you. Each class, that means preference shares and also equity shares, is to be converted into 100 each. Now once it become 25, you again consolidated 4 preference shares into 100 rupees. So and also here into 100. Ready? So then remember actually the numbers are changing, but the amount is not changing. Even if it is 4 of 25 or 100 of 1 shares, amount is same. So what you have to do is simple. Actually when we written the first entry, what was the new share capital of preference shares? 3,70,000. So you cancel it. So individually you write 25. That's it. Now with the same amount, what do you do? Issue the new one. So the individual amount is different, but the total amount will be same. Hey, that means currently we have 3,75,000 divided by 25,000 shares. Ready? So 25. So 3,75,000 divided by 25, you will get 15,000 shares. Ready? So the currently 15,000 into 25, you will get 3,75,000. So but now this 15,000 is to be consolidated. Every 4 shares converted into 1 share of 100 rupees. So that means 15,000 divided by 4, you will get 3750 numbers. Into 100 you will get the same amount. So you don't need to be complicated with these numbers. What you have to do is you just cancel the old shares. So individually you write 25, then issue new. The amount is same. Just like that, preference shares. Just like preference shares, you do the equity shares 1 lakh, you cancel 1 lakh and issue, but individually you write the amount. So we done multiple times from the classroom. Ready? Now it's not a big deal. Now what is the next take? The B class debenture holders decided to take over assets of Karnataka factory at a valuation of 7,50,000 in part repayment of their holding. That means here we have Karnataka PP and we have B class, second class of debentures. So out of which 7,50,000 worth 7,50,000 worth PP has been taken by the debenture holder. So at that time, what will be the entry? Entry is simple. What is the entry? Simple. You cancel the debenture and you cancel the PP also. So the entry will be simple. What is the entry? Remember, the entry will be ഇവിടെ നമ്മള് you cancel debentures. Ready? So how much is the debenture? Debentures is 7,50,000 debentures we cancel. Now 2. Remember, let's understand the question here. The B class debenture to take over the assets of Karnataka factory. Actually, the book value of Karnataka PP was 20 lakh. 20 lakh. So the book value is cancelled 20 lakh. 20 lakh. So the PP is cancelled by 20 lakh. Now remember, the asset is decreased by 20 lakh, but whose fair value is actually 7,50,000. Whose fair value is 7,50,000. So the debentures will be decreased only by 7,50,000. അതായത് debentures 7,00,000 എമൗണ്ടേ കുറയുള്ളൂ. എന്നാൽ PP 20 ലക്ഷം ബുക്ക് വാല്യൂലായിട്ടാണ് അവർ കൊണ്ടുപോയത്. പക്ഷെ അതിന് ഇന്ന് വോത്ത് എത്രയേ ഉള്ളൂ? 7,50,000. അപ്പൊ അവർ കണക്കാക്കുന്ന വാല്യൂ 7,00,000 ഉള്ളൂ. അതുകൊണ്ട് തന്നെ അവരുടെ ലാബിലിറ്റി 7,00,000 കുറയുള്ളൂ. അങ്ങനെയാകുമ്പോ സ്വാഭാവികമായിട്ടും അവിടെ ഒരു ലോസ് ഉണ്ട്. ക്യാപിറ്റൽ റീകൺസ്ട്രക്ഷൻ അക്കൗണ്ട് 12.5. So this is a net entry you can pass instead of this 2. So here what they do is first they do undervaluation of asset, then they settle. Ready? Instead of doing this 2 entry, you could alternatively pass this entry also. Ready? This is what we usually do. Clear? That's it. Now coming into the next one, which is debenture holders agreed to waive the accrued interest in full. That means here it is an accrued interest on debentures. They agreed to waive off. So then it's a profit. So you cancel the debenture liability and to capital reconstruction account. So the entry will be interest on debenture accrued account debit to capital reconstruction. So the entry will be this. Clear? That's it. The next part is this. Stock 50,000 is to be written off and 12,500 is to be provided for bad debt. That means provision for bad debt has to be created. So stock is underwriting. That means writing off. So we will credit stock account 50,000. Ready? Now to provision for bad debt 12,500. Now it's a loss, so we debit to capital reconstruction. When we pass separate entry for fourth item, this will be the entry. Now P&L account balance, there is a negative balance. Trademark and goodwill is to be written off in full. So that means here how much is a P&L account balance, which is 60,35,000. So when a loss which has a debit balance, when you write off a debit balance, we will credit. So P&L 60,35,000. Then goodwill and patent. Let's see. Okay, now how much is a goodwill and patent, which is 1,50,000. 1,50,000. Ready? So in total we will have 60,35,000 plus 1,50,000. So you'll get 70,85,000, which will be debited to capital reconstruction. So once after this transaction, there is no other transaction. So you just calculate the balance of capital reconstruction. There will be a balance of 12,500. You can transfer to capital reserve. If you pass a separate entry for that, capital reconstruction account debit to capital reserves, you can see when you calculate the difference 12,500. That's a simple part. Clear? So instead of doing 2 to 3 entries, you could alternatively write like this. Ready? That's it. So it's an easy question we done multiple times from the classrooms. Now we going to the other question, which is a business combination question. So this is actually we discussed in marathon discussion. Ready? But still I'll repeat. That's it. Now let's do question 5. It's a step back question related consolidation question. Actually this is. Let's read the question. We done almost similar question in classrooms, but some languages are a bit new. Let's read it. Tista Limited manufactures and sells car. Ready? So that's a car company. Now the company want to foray into the two-wheeler business, and that means they want to come to do two-wheeler business also, and it acquires 30% stake in Mahananda for 5 lakh on 1st February 25. So the first time they purchased 30% stake. So remember, when we purchase 30% stake, we do equity method consolidation as per Ind AS 28. Ready? You know that. Ready? So in our language we say simple consolidation. Ready? But they additionally purchased 25% shares on 31st March 25 for 5 lakh after 1 month. So on 1st February 2025, they purchased 30% stake for 5 lakh. But they again purchased on 1st March 25 another 25%. So currently by 31st March they in total they have 55. So remember, so now onwards they have to do complete consolidation as per Ind AS 110. Ind AS 110. Clear? So now you must understand this is a step back question kind of question. So that's it. Now remember, first time they were purchased 5 lakh at 5 lakh cost, 30% stake, but the next time the same price but percentage is different. So that means the share price may be different. Ready? That's why they pay less. Clear? That means compare it, that's why they pay more. Ready? That means 1st February they pay 5 lakh for 30%, but 2 months after they again pay 5 lakh but for only 25%. That means the individual share price, that the fair value market price is different after 2 months. That's a silent clarity you must have there. Ready? Now the summarized balance sheet of this two company. Now let's read out the balance sheet of both the company on 31st March. So the PP we have investment in Mahananda. That means in separate balance sheet of parent company, which is Tista, they have investment in Mahananda, which is recorded at cost 5 lakh plus 5 lakh. So the currently 10 lakh. Now they have trade receivable, cash, share capital, other equity, long-term borrowing, financial liability, that is trade payable. So just like that, here we have PPE, corporate bond investment we have. That's it. Ready? Trade receivable, the other item also. Now let's read out the points. Ready? Mahananda Limited sells the motorcycle under a brand name called Moving Star, which has a fair value of 3 lakh 50 as on 31st March 25. So now look at this information. On 31st March 25, they have an asset which has a value of 3 lakh 50. But as this is a self-generated brand, Therefore, the Mahananda has not recognized in the book. So, you know this knowledge that when a self-generated goodwill or self-generated brand, we will never recognize in books. Why? Because it's not a transaction and the cost cannot be measured reliably as per Ind AS 38. So here, Mahananda actually they have a real asset, but they are not taken into balance sheet. But when they sell their shares or when the other company purchases the stake in their company, they will demand the money equal to that, not this point. So the fair value is 3,50,000, but you cannot see this asset in their balance sheet because this is a self-generated asset. They are not recognized it. Clear? Now, the next information for the purpose of acquisition the fair value. So when you calculate the net asset of PP and investment, there's a value you have to take care. The book value of other assets and liability represent their fair value. That means there's no difference. Now, pass journal entry to give the effect of business combination in accordance with Ind AS 103 at the acquisition date, that means 31st March 25. So the 31st March 25, actually they jumping from 30 to 55 by purchasing 25. So in our language, it's a symbol to complete consolidation transition. So in short, from equity method to complete consolidation. So at that time, you know that we usually pass three type of journal entry. One is remeasurement entry, the other special entry is OC transfer if any balance, and then acquisition entry. Clear? After that, you have to prepare the balance sheet immediately after this moment. That means also prepare the balance sheet after this combination. That means they intending to prepare a consolidated balance sheet. So actually, if students are confused, have a chance in the business combination balance sheet. But taken chain acquirer, but acquirer is a subsidiary. This complete business taken chain. Language is a consolidation question. So that means here we purchase the shares, so the parent will prepare consolidated balance sheet. Ready? That's it. Now there is a special request of NCA is to be measured at fair value. That means the formula will be cost of investment divided by percentage of parent into percentage of NCI. Clear? Working should be part of the answer. Now let's come to the journal entry first. So before coming into the journal entry, when you understand this question, first of all you understand their percentage and the purchase date. So actually the first time they purchased 30%. At that time they are a associate company. Mahananda is an associate. So we follow equity method for that associate consolidation. Ready? Now they have what they have. Yeah, they again purchased 25% stake. Clear? Now what I have to say, it's a step back question. So from no control, they jumping to control. Ready? So it's a symbol to complete consolidation transition. Clear? Now on 1st February, when they purchase the shares of 30%, what is the journal entry? Actually, that is not demanded by the question, but we write it for a clarity. What is that? Investment account debit to cash. So since it's a equity method, in separate and consolidated book we pass as entry. Clear? 5 lakh. Now on 31st March, remember, whenever there is a jumping from symbol to complete consolidation, we pass 3 entry. One is remeasurement entry. One is remeasurement entry. Just a minute. Yeah, remeasurement entry. Remeasurement. Okay. Now the other one is OCI transfer. But if OCI balance illa, so we are not writing this entry because there is no OCI balance which were added with the old investment. But then we write acquisition entry. Clear? So that's it. Now remember, whenever we come to control, that old investment, that means previously held interest, PHI has to be remeasured to new fair value. So what was the book value of old 30%, which is 5 lakh? Now on 31st March, what is the fair value? So this is the tricky part they tested. Actually, ഇവിടെ 31st മാർച്ചിന് നമ്മുടെ ഓൾഡ് ഇൻവെസ്റ്റ്മെന്റ് PHIയുടെ ഫെയർ വാല്യൂ നേരിട്ട് തരുന്നില്ല. ബട്ട് സൈലന്റ്ലി നിങ്ങൾക്കത് മനസ്സിലാക്കാം. എങ്ങനെ മനസ്സിലാക്കാം എന്ന് ചോദിച്ചാൽ ഇവിടെ ആക്ച്വലി നമ്മൾ ഫസ്റ്റ് ഫെബ്രുവരിയിൽ നമ്മൾ 30 shares. Just imagine this is 30 shares. So purchased at 5 lakh. So 5 lakh divided by 30. How much is the share price? Just imagine, which is 30 shares. So 5 lakh divided by 30, which is 16,667. Ready? 16,667. Now, but when you purchase after 2 months, the 25%, which is again you purchase 5 lakh. That means 5 lakh divided by, just imagine it is 25 shares. So the share price is 5 lakh divided by 25, which is 20,000. That means the fair value per share has been increased. So this is the new fair value on 31st March. So if that is a fair value for one share, so old number is 30 shares. So 20,000 into 30 shares. So you do 20,000 into 30, you will get 6 lakh. So that 6 lakh is the fair value of old investment or PHI. So that is a silent point you have to take. Ready? So this is, I done this. Simply you can calculate the carrying amount, remeasurement entry for the 30% investment. The old carrying amount, which was 5 lakh, and currently the 30% fair value can be calculated based on the cost of investment we paid on 31st March. So detailed clarity ഞാൻ already പറഞ്ഞു, but ഇത് ഇങ്ങനെ ചെയ്താൽ മതി, you will get 6 lakh. So that remeasurement increases 1 lakh. So you will pass an entry called investment account debit to P&L. That is the first special entry we write when there is a symbol to complete transition. Ready? The next entry is OCI transfer, but related to PHI there was no OCI balance. So there is no such information. We don't require that entry. Now we pass the transition entry. So here you remember what is the journal entry we pass? Assets at fair value to liability at fair value to PZ. That means the PZ of new shares to, remember, if there is only first time you purchase a controlling stake, you pass entry assets at fair value to liability to PC to NCI difference Goodwill or Gobi. But here we have to insert the complete consolidation. Alongside we have to delete that old investment. So now when you pass this journal entry, you have to take out the fair value. So the PP and investment in corporate fair value is given as this. You don't take book value, take fair value. Clear? Now the trade receivable, no difference. But now remember, there is an asset which having a fair value of 3,50,000, which is not in their books. അവരുടെ ബുക്കിൽ ഇല്ല, പക്ഷേ വി പെയ്ഡ് ഫോർ ദാറ്റ്. വി പെയ്ഡ് എന്ന് പറഞ്ഞാൽ അവിടെ ഫുൾ എമൗണ്ടിനല്ല പേ ചെയ്യുന്നത്, പ്രപ്പോർഷനേറ്റ്ലി നമ്മൾ പേ ചെയ്യുന്നുണ്ട്. നമ്മൾ 55% ആണ് വാങ്ങുന്നതെങ്കിലും നമ്മൾ കംപ്ലീറ്റ് അസറ്റ്സ് എടുക്കും. ഈവൻ വി പർച്ചേസ് ഓൺലി 55%, വി കൺസോളിഡേറ്റ് കംപ്ലീറ്റ് ദെയർ അസറ്റ്സ്. സോ ഹിയർ വി ഹാവ് ടു ടേക്ക് ദാറ്റ് ബ്രാൻഡ്, self-generated brand, or you can say Goodwill, but better to write brand itself. Clear? Which is 3,50,000. Now remember, now you write trade payable which is 1,50,000. Cash you additionally paid 5 lakh. Then the old investment is 6 lakh. After remeasurement, what is the revised carrying amount? 6 lakh. Ready? Now the NCA. Here the NCA is to be measured based on fair value method. So here Remember, on 31st March, you paid 5 lakh for 25% shares. So, if that is a stake, remember, currently 55% is a parent stake. So, the NCA stake is 45. So, ഇന്നത്തെ പേയ്മെന്റിനെ ബേസ് ചെയ്തിട്ട് നമ്മൾ ഫോർമുല എൻ സി എങ്ങനെയാ കാൽക്കുലേറ്റ് ചെയ്യുക? കോസ്റ്റ് ഓഫ് ഇൻവെസ്റ്റ്മെന്റ്. ഇവിടെ ലേറ്റസ്റ്റ് ആയിട്ട് ബൈ ചെയ്യുന്ന 25%ന്റെ കോസ്റ്റ് 5 lakh ആണ്. അതിനെ ബേസ് ചെയ്തിട്ടാണ് നമ്മൾ ഈ 45% എമൗണ്ട് കാണുന്നത്. Then you will get 9 lakhs. So this NC is to be measured based on the latest cost of investment. Clear? Which is 5 lakh for 25. So based on that proportion, you will get 9 lakh for 45%. Now, when you balance this, you will get this goodwill. Clear? So there's a simple way you can get this answer. Ready? So that's it. That's more logic. So journal entry is over. Ready? If you want, you can write a working for goodwill also, but that's not required for finding it. It could be calculated as a balancing figure. Now the second requirement is consolidated balance sheet. Ready? So now remember, here consolidated balance sheet is preparing on date of acquisition itself on 31st March. So there won't be any post profit. So here we already calculated the NCI goodwill. Ready? So we don't require workings of step 1 to step 7. Why we are following step 1 to step 7? To get NCA and goodwill. It is already calculated. Then you don't require steps. You only do assets and liability consolidation. So what you have to do is, you take this assets, PPE, plus this is not the amount you have to take. The amount is a fair value you have to take. Sorry, fair value this. So now when you come to balance, I'm not you do, so you take our item is 30 lakh 50 plus 7 lakh 50. Now when you coming into investment in corporate bond, you can see there is a 5 lakh rupee, that is a fair value. Now there is a self-generated brand which is 3 lakh 50. Ready? Self-generated brand and paid goodwill. How much is the goodwill? We calculated 5 lakh. So initially we take 8 lakh 50. That's it. Now trade receivable, both of their amount will be 1 lakh 30. Cash, both of their amount will be 5 lakh 20. You can see their balance sheet and you can do. Ready? So actually I'm discussing the struggling area. Easy area I'm not discussing in much. So you can easily calculate that. So that's it. Now coming into liability, we have liability. First we have trade payable 5 lakh 50 plus 1 lakh 50. Now remember, we have NCI, long-term borrowings, which is 4 lakh. NCI, which is 9 lakh, we already calculated. Now parent share capital 5 lakh. Now other equity, so the parent, so we usually do step 7 consolidated reserve for calculating other equity, consolidated reserve. So at that time, reserve of parent plus share of post. Ready? So since we prepare consolidation on data question, no post amount. So what is the reserve of parent will exactly be here. So let's check it. What is so currently they have 50 lakh in their books, parent. We never take this and this because it's a mutual owing. Clear? But this 50 lakh has been edited by this amount. That means once we pass the remeasurement, the P&L of parent has been increased by 1 lakh. So the new reserve of parent will be 15 plus 1, 60 lakhs. So total you will get 16. That will be the amount. Once you do balance, you will get the 41 lakhs. So the same answer is they are also showing. Ready? But they presented bit complicated. So I shown just the way we doing in the classrooms. Clear? You can refer their answer. They done combined journal entry instead of writing 2 journal entry. All the workings are there. So that's it. So clear? So we done that question beautifully. So I think everybody is super fine with that question. Now we have a consolidation question. Just a minute. Yeah, there's a question, consolidation question. Yeah, you take question 6. So in our language, that step back question topic was related to consolidation. We discussed in consolidation chapter. So already 40 mark question tested. Another 40 mark question is testing here also. Ready? So it's a complete consolidation we done multiple times from the classrooms. Ready? So I'll discuss and I'll show the answers. Ready? Now remember, they gave you a balance sheet on 31st March 25. There you have PP investment in S Limited 12,500. Inventory trade receivable. Ready? So trade receivable you have this amount, but out of that 200 is due from S Limited. That's a common item, mutual owing. You have to delete it. Clear? That's it. Then cash and cash equivalent you have. Then share capital, other equity, trade payable. So here actually the mutual owing is not exactly equal to 200. So there is a 150. So let's see the additional information. There may be some transit items. That's why the balances are in different amounts. Clear? Now, usually previously നമ്മൾ marathon questions ചെയ്തത് തന്നെയാണിത്. So I'll read and I'll discuss and I'll show how to write the answers. Ready? On 1st April 24 they have a opening share capital of 7,500. That's the opening share capital. Closing of share capital is also same. That means no post share capital. Now on 1st April they have 7,500. That's an opening balance, 7,500. Now H Limited acquired 80% stake for 12,500. That's a cost. So here data question is 1/4. Percentage is 80/20. Clear? So that's it. Now the aggregate net asset of S Limited on 1st April 24 included PP and inventory standing in the books. So 8750 So in short, the book value is this and their fair value is. So when you compare the book value of PP and fair value, there is a 750 increase or profit on PP. Ready? So alongside 1250 was a book value of inventory and fair value is 500. So there is a decrease or loss. How much is 750? So there is a profit on PP and loss 750, same amount of 750 on loss. So net balance will be 0. Ready? That's it. So it's a non-current item and current item. Ready? So and rate of depreciation. Clear? So that's it. Now remember, we will discuss when we do the sum. Ready? Now NC is to be measured based on fair value calculated per share value. That means taking PZ paid by H Limited. Don't be confused. ഇവിടെ PZ base ചെയ്തിട്ടാണ് NC കാണുക എന്ന് പറഞ്ഞാൽ cost of investment divided by percentage of parent into percentage of NCI. That is a NCI on data acquisition. Now goodwill was impaired. So actually when they take NCI based on fair value method, full goodwill have been recorded. So actually you eliminate this goodwill impairment from step 6. Step 6 you deduct alongside step 3 post P and L. Ready? That's it. Step 6 we write goodwill, so deduct that. Now H Limited sold worth of 300 lakh to S Limited on credit at a 25% on cost. But S Limited, however, received 250 worth of goods on 31st March 25. So that's a first hint. Remember, you can see there is a difference of 50 in their mutual owing. So they say the reason for that. Let's see. Actually, അവിടെ 300 രൂപയുടെ ഗുഡ്സ് H has sold 300. Ready? So they pass the entry for credit sale debtors to sale at 300. But in yes, they only get 250 by this March. So they passed a purchase account debit to creditors of 250 only. So that means 50 rupee entry is not recorded. So that is a transit item, goods in transit. So they have to pass an entry for reconciliation is goods in transit, which is recorded in inventory account debit to creditors. So 50. So for that, you have to do is you have to increase the inventory. Ready? Also, you have to increase the creditors by 50. So once you increase the creditors or trade payable, so first you do this plus 50, then it become, once you add it become 200 also. Then since it's a mutual owing, you delete 200. Clear? Now that's it. On 30th March 24, that means after we purchase the shares in yes limited paid a dividend, a final dividend of 20% for the last year. So that's it. So it's paid. So it's limited. So actually this is a pre-acquisition dividend. But in new workings, namakkariyam endana in this base step 3 adjust cheyum. So when you calculate current year profit, so closing minus opening plus dividend, then once you calculated pre and post, you deduct from post. Clear? So that's it. So now they additionally give one more note. Just a minute before showing. There is still, yeah. So the directors of both the company have proposed a dividend for the next year 24-25. So actually this proposed dividend will never show in books, because it's a contingent liability. But you can write a note related to that, since we already discussed in many times, proposed dividend will not record in the books. It's a contingent liability. So this dividend will never affect our working. So prepare the consolidated balance sheet. So now we go through the working. So what you have to do is you have to write the formats first, balance sheet format. So then okay, yeah. So you write all this. Ready? So you do the basic culture. First you write this and cash equivalent. You write basic cultures this, then you take parent share capital, then you take parent share capital. Clear? That's it. Then we have once after we done the basic culture, before coming into the step working, we have to write the workings related to adjustment. So the first working is revaluation profit or fair value adjustment. So increase on PP, there is a 750 non-current, and current item there is a decrease. So by total 750 profit on non-current, 750 loss. So net amount 0. So remember, so related to this, what is adjustment? Since this is non-current asset, so first we have to do adjust with asset. So we add with 750 with the asset. Ready? But on current item, we do the consolidation on subsequent date. ഒരു കൊല്ലം കഴിഞ്ഞിട്ടല്ലേ മക്കളെ കൺസോളിഡേഷൻ ചെയ്യുന്നത്. അതുകൊണ്ട് ഈ ഇൻവെന്ററി അസ്യൂംഡ് ആസ് sold by 31st March. So that inventory is not living in their books. So we don't need to adjust with the asset. So now when we coming into step, first on both the item we have to do step 4 working for calculating the net asset, but net asset on date of acquisition, but since it's 0 you don't mind it, but then there will be a double effect. So on current item, so we have to reverse the revaluation loss. So when you reverse the revaluation loss, you have to add back. Clear? That's it. So in step 3 post P and L, add back in step 3 post P and L. Clear? Now the next adjustment. So before reading this, so actually there is a transit item. After that, 40% of total intercompany sale were still unsold. So now remember, before coming into unrealized profit, let's see the transit items. So here, as we discussed, inventory add A&M, creditors add A&M. So inventory added with 50. Clear? Now creditors is also added with 50. Clear? Now remember, there is an unrealized profit. It's a downstream transaction because it was purchased from S Limited. So the stock is lying in, stock is lying in S Limited. So it's a top to bottom. So that means downstream. Now, how much is unrealized profit? 40% of total intercompany sale still unsold. So 300 is of total sale into 40%. That's a amount into how much is a profit? 25%. Since it's on cost, we 100 plus rate. That's it. So the workings will be like this. Ready? So you'll get 24. So this you have to deduct from stock. We done it. So you'll get the stock after deduction will be this. Now you have to do in step 7. Clear? Now the next adjustment is related with goodwill impairment loss. So this is 100. So marakarada step 3 ready. So step 3 we deduct, and also we deduct from step 6. Now there is dividend, which is 1500. We do step 3 P&L. Now let's see the steps. So before that, I gave the answer hint for transit item. Ready? You can check it. Clear? Now coming into step, date acquisition is 1/4. Ready? So 1/4. So the pre 0, post is 12. So percentage holding is 80, 20. Clear? Now the crucial adjustment is step 3. Here it is only other equity. There is no general reserve. Ready? So the closing and opening. Since there is dividend, you have to add back it. Then you will get current year profit. Then as usual, since its data acquisition is opening in pre, there is only amount of opening balance. Current year profit enter in post. But remember, we have to do some adjustments. So first adjustment is related to dividend. So we have to deduct it. Clear? That's it. Now one more adjustment which I was not discussed, which is additional depreciation due to upward revaluation. So here is a 750. So 750 is a revaluation amount. After that, so 750 into 10%. Since it's not a mid of the year, we can calculate the depreciation in easy way, which is 75. So this you have to deduct first from the asset PPE, then you have to deduct from step 3 post P&L. So that is we done here. You can check it. 75. Now revaluation loss on current item reversed by adding it 750. Then there is an impairment loss. Then you will get this amount, that is a post amount. Now when we take into net asset, pre column post, share capital will be in pre, no post other equity, this ready. Now actually we take revaluation profit, which is 0 here. So then you will get total this, now this. Now NCI is to be measured on fair value method. So 12,500 divided by 80 into 20. you will get this. Then share of post, that means 4325 into 20%, you will get this. Then that is the closing NCI. Then when you calculate the goodwill, cost of investment is 12,500, NCI on date acquisition is 3125. Then what is it? A net asset is 15,000. Then on date acquisition 625 was the initial goodwill, but there was an impairment loss, so the goodwill will be reduced. So 525 will be the new goodwill. Then when you calculate the other equity, grant other equity, reserves of parent, which is 43,750, you can check in their question, you can see their question 43,750. Then you add share of post ready. That's it. So 3460 then you will get this. Then you deduct unrealized profit elimination, then this will be ready. Now okay, clear. Now remember, that's it. So ultimately this will be the grand amount. So let's see in the ICMA answer key. So you can see there's a answer key. So you know that we do the consolidations steps very smartly, ready. So it is comparatively easy. So that's it, we done it. And you could also write a note related to proposed dividend, ready. So apart from that, this question is officially over. Now coming into the next question, clear? Okay, so this is actually, there is a question related to economic value added and market value. This is a bit tricky question, but easy question, clear? So let's see the question, but just a minute. Yeah. So B Limited is interested to calculate economic value. So you are provided the following information. So you know that economic value will be calculated as NOPAT minus cost of capital. Ready? There's a basic formula. So here actually they gave this information, but before reading this I will read this. So there is a debt of 2,000 crore. So equity, share capital, reserve. So the total capital employed for EVA calculation is 10,000. So which is also they give 10,000. Out of this 2,000, that means 20% is a debt and rest of 80% is a equity. Now risk-free rate, risk-free RF is 6%, beta is 1.5, market rate of return, that means RM is this. Now you will get cost of equity, that means RE or KE as you learned. So RF plus RM minus RF into beta. Ready? That's it. Then NOPAT, net operating profit, after that directly take. So here calculation of EVA is comparatively easy, but they additionally require market value added. So market value added will be calculated as market value of firm minus book value of equity. Ready? Market value of equity minus book value of equity. For that they gave you this information, share price, for calculating the share price. So this share price at the beginning of the year was 200 and their face value is 10. Last year EVA was 250. കഴിഞ്ഞ വർഷം 250 EVA. From the trend of share price, it is likely that increase of EVA from 26 to 50% lead to 25% increase to share price. That means if economic value added increased by 26 to 50%, then market value will be increased by 25%. Are you okay? That's it. Share price will go up. So it's a elastic, I mean there is a relation. Ready? That's it. Now remember, അതായത് എക്കണോമിക് വാല്യൂ ആഡഡ് കഴിഞ്ഞ വർഷത്തേക്കാൾ ഇപ്പോൾ 26 മുതൽ 50% വരെ കൂടിയാൽ ഷെയർ പ്രൈസ് 200-ൽ നിന്ന് 25% കൂടും. റെഡി? അത് ഷെയർ പ്രൈസ് മാർക്കറ്റ് പ്രൈസ് പെർ ഷെയർ കാണാനുള്ള ഒരു ക്ലൂ ആണ്. That's it. Now, any increase up to 25%, no change. അതായത് 25% വരെ ആണ് എങ്കിൽ സീറോ ഇൻക്രീസ് ആയിരിക്കും മാർക്കറ്റ് പ്രൈസിൽ. നൗ അതുപോലെ തന്നെ an increase beyond 50%, that means if it is increased by 50%, share price will go up by 30%. Ready? Now, to calculate the market value per share, 200 plus increase, but before that you must know IVA increase. For that first you calculate IVA. So let's see the question. Let's see the question answer. Clear? So let's see. Actually economic value added has this as a basic formula. IVA no pact minus capital employed into weighted average. There is a cost of capital. Ready? Cost of capital. Now here NOPAT is directly given, capital employed is also directly given 10,000, then weighted average cost is not directly given. So let's see how do we get it. So this is a cost of debt, but there is a tax rate of 30%. So we have to convert into post tax rate. For that 12% into 0.7. Ready? Now cost of equity you will get by substituting this formula. So here cost of debt, that is KD, is equal to post tax, you will get 8.4. Cost of equity by substituting this CAPM formula, you learning in FM and SFM many times. So risk free return is 6. Risk free return is actually 6. Ready? And market return is 15. Beta is 1.5. So when you substitute this here, you will get this. Ready? So 19.5%. Now the weight of debt is 20%, or 2,000 out of 10,000, and 8,000 is a weight of equity out of 10,000. So now calculating weighted average cost is equal to KD into weight of debt plus KE into weight of equity, which is this. So you will get weighted average cost is 17.28. So here NOPAT, operating profit after tax, is how much? 2,100. Now this is a capital employed into weighted average, you will get this 372. So IVA calculation is extremely easy here, but market value added can be calculated by using this formula. What is the market worth of my shares in? Ready? So for that, one share price has to be calculated first. Book value of equity is already given. What is the book value of equity? This is the equity. This is the equity, 8,000. 8,000 is the equity. Now we have to calculate market value. So for that, one share price has to be identified. So totally how much is the shares? So let's see. Equity share capital 500. So face value is 10. So 50 shares are there. Ready? Now share price at the beginning was 200, and a dash amount of increase, which is depending upon the increase of IVA. Let's see how much the IVA has been increased. So now IVA current year 372, last year 250. So this is the increased divided by last year. So that is a percentage of increase you calculate. So this is a percentage of increase you will get. Clear? Now since IVA increase comes within the range of 25 to 50, share price will increase by 25%. So the current share price at the beginning is 200 plus increase is 50. So the share price at the end will be 250 per share. Now total shares, currently share capital is 500, face value is 10. So the number of shares is one minute, there's 50 shares. Clear? So 50 shares. So 50 shares into 250, you will get this is a market value added. Simple, clear? So you can check their answers also. Ready? Okay, you can see this there. This is and this is a item. Ready? Okay. Market value, this is clear. Book value minus market value, clear? That's it. Now, what is a further question? Let's see. Let's see what is the next question. Analyze the benefits of XBRL. So you know that benefits of XBRL. Ready? So we learn it. So since it's a theory question, I'm not explaining it. Clear? Then discuss the functions of C and AG related to grants or loan. Many times I said this is a probable question, and there is another question, responsibility of Gazab. Clear? And also write the name of IGAs. Ready? That's it. Now there is a problem question which is on 1st April 24, Venus acquired 35%. That means they will follow equity method symbol consolidation. Ready? Okay. Now the cost of investment was 3 lakh. Now that subsidiary Neptune has a net asset of 5,50,000 on the date of acquisition. Ready? The fair value of those net asset was 6,50,000 since the fair value of PP was 1 lakh. That means നമ്മൾ ഷെയർ വാങ്ങുന്ന അന്ന് അവരുടെ PPയുടെ ബുക്ക് വാല്യൂ വേഴ്സസ് ഫെയർ വാല്യൂല് എത്ര രൂപയുടെ വർധനവ് ഉണ്ടായിരുന്നു let's see, 1 lakh in the വർധനവ് ഉണ്ടായിരുന്നു. Ready? 1 lakh in the increase ഉണ്ടായിരുന്നു. Now remember, the PP have remaining life of 8 years. So additional depreciation കാണാൻ വേണ്ടിയിട്ടാണ് ഈ ടൂൾ തരുന്നത്. Note it. Ready? Okay. Now remember. This PP have remaining 8. Now for the next year, Neptune has earned a profit of 1 lakh. 1 lakh. But remember, in their books, they did not consider additional depreciation. So from this 1 lakh, this is a post profit before adjustment. You have to deduct additional depreciation. How much is the additional depreciation? 1 lakh divided by 8. How much? 1 lakh divided by 8. 12,500. So 12,500. So how much you will get? 87,500. That's a post profit. Now they paid a dividend 11,000 out of this. Ready? Now that means out of this they paid a total dividend of 11,000, and Neptune has recognized the loss of 15,000 that arose from remeasurement of defined benefit in other components. So that means they have an OCI profit also. Now calculate the venue's interest balance on 31st March under relevant indices എന്നുള്ളതാണ്. So ഇവിടെ first initially how much was the initial amount? Just a minute. Yeah, just a minute. Yeah, initial amount was cost was 3 lakh. ഇതിലോട്ട് നമ്മൾ എന്ത് ചെയ്യണം? ഷെയർ ഓഫ് പോസ്റ്റ് ആഡ് ചെയ്യണം. ഷെയർ ഓഫ് പോസ്റ്റ്. So 3 lakh plus share of post. So here 87,500 into how much is the percentage? 35. So which is 87,500 into 35%, you will get 30625. This will be the added. Now when the dividend they gave, how much is their dividend? Total they paid a dividend 11,000. Ready? So 11,000 is the total dividend into our dividend is 35% dividend. So yeah, 11,000 into 35%, 380. So this will decrease my investment balance. Ready? Then plus OCI balance. OCI balance, how much is 15,000? 15,000 into 35%, how much? 15,000 into 35%, 5250. Ready? So 5250 plus 3 lakh plus 30625 minus 3850, you will get 332,025. that will be the balance of investment, since we follow investment equity method. Ready? So you can see their answer also like this. Clear? Yeah, that means yeah, first, okay, so 3 lakh plus 30. Sorry, there is a calculation mistake. I'm done. Ready? So actually this was a loss, I think. Ready? Yeah, loss. Sorry, extremely sorry. So you have to deduct it. That's my mistake. Then you will get the figure, not this 332. Instead of that, you will get a figure 3 lakh plus 625 minus 3850 minus 5250. You will get 321,525. That's the question. So actually in consolidation they tested 14 from step back question, and there is a complete consolidation 14 plus a 4 marks, so in total 32 mark in descriptive question they tested. Ready? Now we have to see the MCQ question. So just quickly go through MCQ question. So this MCQ question, I written all the correct notes related to this. Ready? You can see that. So I'm not discussing, but this is the only item bit tested with bit tricky in last attempt MCQ. Alagananda has took an asset for 5 years lease from Mandakini Limited. Ready? So payment over lease term, this per month. So annual lease payment 12,000, contingent rent, cost of service, taxes, residual value, GRV, guaranteed residual value, fair value of asset after 5 years. Alagananda has an option to purchase the asset after 5 years at 2,000. Ready? Now it is reasonably certain that the Alagananda will exercise the option. Calculate the lease payment. Remember, as we discussed in Index 116, lease payment includes annual lease payment plus GRV plus price of purchase option, but it will exclude contingent rent, maintenance cost, tax. So this will be excluded. So now annual lease payment, which is 1,000 for per month into 12 for 1 year into 5, total 60,000. GRV is this price of purchase option whose value is 2,000. So this will be the lease payment. Ready? All the rest of item I'm not discussing here, which is I done in a separate video, which I done 2 months ago. Ready? So you I'll also add the link of that. Ready? You can see that MCQ description. Ready? So I also written the relevant notes to that. So apart from that, this question is over. This discussion is over. We done all the clarities. നിങ്ങൾക്ക് എന്താണോ അത് ആവശ്യം ഞാൻ അത് ചെയ്തിട്ടുണ്ട്. പിന്നെ ഒരുപാട് ടൈം ഇതിങ്ങനെ ഓൺ സ്ക്രീനിൽ ചെയ്യുകയാണെങ്കിൽ എടുക്കും. ദാറ്റ് വിൽ ബി ബോറിംഗ്. സോ ദാറ്റ്സ് ഇറ്റ്. സോ നിങ്ങൾ കമന്റുകൾ അറിയിക്കണം. സോ ദാറ്റ്സ് ഇറ്റ്. ഹെൽപ്ഫുൾ ആണെന്ന് കരുതുന്ന നിങ്ങളുടെ ഫ്രണ്ട്സിന് ഷെയർ ചെയ്യണം. That's it. Thank you. See you. Bye-bye.